A bear engulfing candle is the one that swallows. The opening and the closing swallows the previous candle entirely. And if we look at this candle right here, this is a bear engulfing candle that I'm just talking about right here. Right here, that candle. See how the body swallows the body of the previous green candle? That is a bear engulfing candle. So, with that in mind, when you see one of those bear engulfing candles, you know for sure the trend that follows should be either strong, or there should be a reversal at at some point of that, on something like that. But that's not what I'm talking about today. Let me show you something really, really important that you need to do. You need to simplify your trades really easy using the opening range breakout and high Kanashi candle chart pattern setup. The way I would set up my trade is, it's not like I do it every day. First, on the chart here, you're looking at 7 minute chart. We have this hull moving average, which is just for trailing my trend, and then or trend following. And then I have this skinny blue line here, which is the VWAP. Actually, in this case, this VWAP is not going to look more similar to yours, but it's a VWAP. And then I have that blue line over there, right under that writing. Okay, that blue line is my opening range breakout, which is marking the top of the previous candle opening and the closing. Okay, um, with that in mind, let me go ahead and change my candle to high Kanashi. Okay, if you don't know how to do that, you can click on the bar styles, go down to high Kanashi. Once you locate that, you can favorite if you want, then click on it. Once you do that, see the magic. Okay, the chops that you would be seeing, in a regular candle, you do not see them here. And this just build and boost your confidence way, way more. And the beautiful thing about this, or the beautiful part of this, is I can see a clear opening range breakout. Okay, a clear opening range breakout. And with that clear opening range breakout, I am looking for candles like this, candles without the wick at the top for bearish momentum. Candle without wicks at the top, candles without wick at the top, candles without wick at the top, and more importantly, a breakout to the downside for bearish momentum, and also, or a breakout to the upside for bullish momentum. But in this case, for today, we had a strong bearish momentum right before the market opened. Because if you look at the first red candle here, before the market opens, it is a candle without a wick at the top. That red candle, it has no weight to the top. That just signifies a strong, strong trend. It's about to begin. Anyhow, we would get in that trade after right here, buy right here after at the breakout, stay in the trade, and exit right here as soon as you see this doji candle which touches the whole moving average. Okay, that's my strategy. And that's simple. You do not need to stress yourself about reading candle patterns every day. You don't need to. Just change and use Haikanashi. It is going to make your life easy. I always preach about it, and that is still the word of the day. Again, the word of the day is Haikanashi and opening range breakout, along with either a moving average of your choice. So in this case, yes, I get in a trade, I stay in a trade. How do I trail with this moving average? I stay in this moving average. I trail with this moving average. As long as the wick is not touching the whole moving average, I will stay in the trade. But if it touches, I will exit the trade. A perfect example is on this green candle. This green candle touched the whole moving average, exit, no doubt. And you see how the next candle that follows was strong. Next is, we had a doji here, but remember, it starts to touch this whole moving average. It's not touching this whole moving average. I stay in my trade. Um, where we marked earlier the bull engulfing, the bear engulfing candle. It is a candle that fell well, but on a high Kanashi, it's looking not that bad. The actual candle we would need to pay attention to would be, if I can move this thing, would be this red one. That is a doji. Okay, and because it's a doji, it's not just any ordinary doji. It's a powerful doji. It's a if you look at the wick is going through this green zone here. The wick is cutting through this green zone, which is clear, get out, get out, get out. Okay, that's what I would That's what it would tell me. So with that in mind, the candle that follows that doji, I would expect it to be a red one that would be bumping down here or dumping down a little bit to this doji before it pick back up to this doji before it picks back up to the upside. So keep an eye out for those kind of thing if you're trading with Ikenashi. But if you're trading with regular candles, you can stick to whichever chart pattern you want to stick with, and just keep that up. I think this was actually just a market manipulation candle right here. Yeah, this was a market manipulation. I think, yeah, but still on my strategy, I would get out. But that was a market manipulation. As you can see, it picked back up. But in this case, if I was in this trade, I would have just exit my position right there. So keep it simple. Identify entry, enter the trade, get green, move your stop loss to even or break even. Either you trail with your stop loss or just get green and get out. Okay. Identify entries. Your entries are the dojis around the dojis. Okay. As soon as you see the doji, those are your entries. You can wait for the next candle. On the next candle, if it forms without a wick, just don't hesitate. Enter. Um, yeah, identify entries, buy right here, stay in the trade, or buy right here, get green, stay in the trade, or get out at your signal, get out signal. Okay. Again, identify entries, get in, get green, get out. The three G's is what I call it. The three G's will save your life. Get in, get green, get out. Okay? Simple. Simple. You don't need to rely on the news. The news will come, but when the news come, you'll be there waiting because you have the opening range breakout. Whichever side it breaks to, if it's a bad news, just trade puts. If it's good news, trade calls, but just use the news as a catalyst that will just drive your trend. You stay with the trend as the news continue going, you will just be golden. Okay. Check me out later. Have a good bye for now. And yeah, sorry, actually, before I go, this is picking up, and which of course it's a kind of without a week, that would still be a good trade. But like I said, I would have already gotten out. With that in mind, have a beautiful morning. Check me later, and I will catch you later. Bye.